Hi everyone, welcome back to my channel. I'm Ling, and today I'll be tackling a question that is on every property buyer's mind. New launch or resale, which is better? Well, there's no one-size-fits-all answer. I'm here to shed light on the pros and cons of each option. So join me as I delve into the differences between new launch and resale and the costs associated with both choices. By the end of this video, you'll have a better understanding of which option that may best fit your unique needs and objective. So let's get started. Firstly, let's consider the cost. For illustration purposes, I'll use the Shaw Residences and Tembusu Grand as example. Both are leasehold properties located in District 15. The Shaw Residences was completed in 2004, whereas Tembusu Grand was just launched recently and is expected to TOP in 2027. Looking at the size, which I use this property guru listing as an example, the 3-bedder unit at the Shaw Residences is asking for 2.48 million. The usual 3-bedder unit at Tembusu Grand is a bit small to compare, so let's use the 3 plus study unit, which is 117 square feet, starting from 2.67 million. 1173 square feet is around the same size as the 3-bedder at the Shaw Residences. I think this is more easier to compare, and I will use 2.7 million for Tembusu Grand for easy calculation. You can also use this calculation if you are struggling between two options, resale or new launch. Just a quick disclaimer over here, this is just an example. I'm not implying that Tembusu Grand is a good buy or bad buy. So with this example, Tembusu Grand at 2.7 million and the Shaw Residences at 2.48 million, let's look into some costs involved. When it comes to the down payment and all the upfront costs that you need to pay for the property, the difference between a new launch and resale in this case is about $65,500. So remember this amount and we will come back to it later on. Now moving on, in terms of loan repayment, for resale condo, you will need to make a 25% down payment and then start your monthly repayment right away. In this case, when the interest rate is about 4%, the monthly installment to purchase this resale condo is about $879 per month. Whereas for new launch, owner get to pay for the property progressively in stages instead of all at once, which we call it progressive payment scheme. This progressive payment scheme allows you to incur lesser installment during the next few years while the project is being built. Basically, buyers pays a monthly installment when the construction reaches a certain milestone, which gradually increases every stage. And due to this lower monthly installment, you will incur lesser interest costs as compared to when you buy a resale condo. And because the interest rate is really high at the moment, some buyers choose to buy new launches because they want to lower down their interest costs. Perhaps by the time when the bigger installments amount kicks in, the interest rate may have already dropped. Now that we have our numbers ready, let's discuss which option is better based on different objectives. So in this session, I'll split them up into 3 different objectives: own stay, rental yield, and capital gain. Firstly, for those who are buying for your own stay, if you are buying a resale, you will most likely want to renovate your house, unless the unit that you bought is really well maintained. Otherwise, you may need to factor in the renovation costs. Based on our scenario, the Shaw Residences and Tembusu Grand, the differences in the initial down payment and upfront costs are about $75,500. So I took this estimated renovation cost online. I basically just Googled it. So based on this estimated renovation cost, if you were to buy a resale condo at the Shaw Residences, would it make more sense for you to top up a little bit more to get a new launch condo where the renovation cost is lower? Also, do take note that for new launches, it usually comes with cabinetries, fixtures, and appliances that are in brand new condition. On top of that, for new launches, buyers have 12 months from key collection date to report any defects to the developer, who is obligated to fix them. Unlike resale condo, what you see is what you get. It has a higher risk of things breaking down, leaving you with costly repairs. Another important factor to consider is that both properties are leasehold. The Shaw Residences was built in 2014, meaning it's about 9 to 10 years old right now, sitting on a depreciating lease. Taking into consideration of the age of the condo plus the potential renovation cost, you will need to weigh whether paying a bit more for something new is worth the investment. Once again, a quick disclaimer, I'm not saying that Tembusu Grand is a good buy. These are just examples to illustrate some factors you can consider when making your decisions and also some calculation that you can do for yourself to weigh your options. Sidetrack a little, if you know Katong really well, there are actually 3 new projects this year. First is Tembusu Grand, which was just launched recently. Second will be the Continuum, which will be launching soon. And lastly will be Diamond Grand. Honestly speaking, if Diamond Grand pricing is okay, among all these 3 projects, I would feel like Diamond Grand will be a better buy because it's less risky. I can cover this topic next time. Okay, back to today's topic. Well, based on this scenario, it may make more sense for you to consider new launch. There are also other factors to consider if you are buying for your own stay. Firstly, do you have a place to stay, or do you have to rent while waiting for the new launch to be completed? If you need to rent in the meantime, you will need to factor in the extra cost of renting. Rental can be expensive this day. Depending on which type of property you rent, if you're not fussy, you can probably get a 3-bedder at about 5k in District 15. Okay, let's take this property guru listing as an example. If you were to rent a 3-bedder unit for 5k per month, that will amount to 180k over 3 years, assuming that the new project take that long to TOP. Considering the cost of rental, you may want to reevaluate your option whether resale or new launch is more feasible for you based on your financial situation. Ultimately, the decision is yours to make. Moving on, if your objective for buying a property is to generate a passive income while renting it out, you are most likely a long-term investor who is looking to build a net worth while earning a steady stream of rental income. In this case, resale property may be more appealing to you as they offer immediate rental income that can be used to pay off your mortgage and build equity at the same time. In this scenario, for example, if you are able to rent out your property at, let's say, $6,500, then it will be great because your tenant is technically paying the interest cost for you. Better still, if you're able to rent at a higher price, essentially your tenant is kind of paying for the property for you. One advantage of going for a resale property is that there may be lesser risk involved. You can compare what the current and past tenant are paying and also the rental yield around the area to determine if the rental amount is fair and if the unit is a good investment. Additionally, resale properties are generally cheaper than new launches, which can result in a higher rental yield. However, the maintenance cost may be higher for resale properties and you may need to do a little renovations or repair before renting it out, doing kind of a little rehab to make it more appealing or giving the property that look to draw tenants. Next, if your objective is to make capital gain through buying and selling property within, for example, the next 4 to 6 years, then new launch properties may be a better option for you. Typically, new launches offers a progressive payment scheme, which means that your money repayment is based on the property construction progress rather than paying in one lump sum. This allows you to use your remaining cash for other investment opportunities. Furthermore, developers usually offers early bird discount at the start to entice potential buyer and gradually increase the prices later on after a certain percentage of the units have been sold. With developers staging the prices, investors may also benefit and earn some paper gain. As you know, not all new launches can buy, but if we do our analysis and choose the right property, then we are able to eliminate the risk and make a more informed decision. For example, let's take a look at this project which was completed in 2019. Typically, if we choose the right property, the transaction prices usually look like this graph. So this is the part when the developer just launched and the early bird started to buy. The price tends to increase gradually over time as the developers increase the prices. And when the project TOP or completed, some investors will start to lease the property and try to sell it with a profit. So typically for TOP project, after this increase, the prices tend to go stagnant for a while because the original owners don't mind selling at this price anymore. And this sharp increase after the stagnant period is mainly because of COVID when the supply is low. So just a quick snapshot of how much these owners made after selling their unit after the project is completed. Of course, bigger unit tends to have more profit because the unit area is higher. Therefore, investors usually make use of the first mover advantage to build wealth while keeping their initial costs low due to the progressive payment scheme. One question that may come up is that, what if we can't sell the new property at the price that we want upon TOP? Because sometimes it depends on what the market situation is like 3 to 5 years later. As you know, there's always plan B. It's important to take note that the property is still yours and can be rented out to generate rental income while we wait for the right opportunity to sell. As newer property tends to attract tenants due to their novelty and emotional appeal, finding a tenant should not be a major concern. Take for example the recently completed project Park Esta, which has brand new facilities and amenities. You can easily look up the rental rates for this project on Property Guru. The asking price for a 3-bedder is around $6,500 per month, which can most likely cover your interest costs. Some people might ask, could resale be a better option for this kind of investors who focuses on capital gain? Well, it depends. It's important to consider all factors, including the potential resale value. Let's say, if you were to buy a resale at this stage, you have to keep in mind that if you buy a resale, you have most likely helped the first owner to make a profit margin. While you bought it at $1,200 PSF, you have to take note that there are original owners who purchased the property at $900 PSF who have yet to sell their property. And if this second owner decide to sell their property later on, they may need to sell it at around $1,400 PSF to make a profit. Therefore, this is the risk that they need to take if they are competing with the original owners who just need to sell it at $1,200 PSF to make a profit. But for those who are priced out to buy a new launch, not to worry. You can always consider resale even though it comes with some risks. There are definitely some good deals out there to look out for. Ultimately, whether you choose a resale or new launch will depend on your objective and priorities. It's important to do your own research and consider all factors before making a decision. This is why real estate agents are out there to help you with the analysis. A good agent will be able to tell you the pros and cons, but ultimately the decision is yours to make. With that, thank you so much for watching, and if you need any assistance with your real estate matters, you can also reach out to me at 8111 4672. Okay, thank you, bye.